What's going on, folks? My name is Chris, and in this video I'm going to give you my opinions on something I think new traders should be aware of when it comes to using online funded futures prop firms for futures trading, learning futures trading, day trading, and all that stuff. I really think that this video can give you a different perspective on online funded futures prop firms. Hopefully I can open your mind up to certain different topics. So please hear me out. I have over 5.5 years of experience trading. I have 3 years of experience trading futures. And because I'm a content creator, I've had the chance to talk with lots of different companies that are involved with these things and lots of different individuals and traders that talk about these funded prop firms all the time. So I've consumed a lot of content regarding this stuff already. Okay. Now let's talk about it. I personally do not have a lot of experience using these online funded prop firms. Now, when I talk about online funded prop firms, I'm talking about these companies that focus on learning futures trading, where you pay a small ticket entry price, like $90, $100, $200, and then you get access to a funded account or an evaluation account. And then if you pass the evaluation, then you get funded, but sometimes it's not even actually a real account. So I wanted to just be clear, I'm not talking about legitimate proprietary trading firms. I'm talking only about these online ones where it's like, let's be honest, they're called kind of fake prop firms. Although some of them could categorize as it because there's sort of a gray zone there. But that's kind of what I'm talking about here. So these companies like Top Step, Lilu, Apex, just to name drop, I'm not targeting these companies at all. I'm just giving you an idea of like who I'm talking about, okay? And again, nothing against those companies. I know that they're operating their business in whatever way that they are. So really, honestly, this is not about any specific company or any specific individual. I'm just giving you my opinion on this. Next thing is, this video is brought to you in partnership with my futures broker, Ironbeam Futures. If you're looking for a futures broker to trade real money futures, check out Ironbeam using the link down below. And I'll talk more about them later, okay? So the other thing is that this is not any advice to take real risk regarding trading, because I'm going to be talking about real risk taking in this video. I'm not advising any of you to take risks, financial risks. You need to strongly consider whether risk taking is suitable for your current situation right now. I'm just giving you sort of my opinion on this and why I believe real risk taking has a strong advantage over trading a funded account. And I'll give you guys a few points about this. Okay, so let's get into it right now. Smash the like, smash the subscribe, all that stuff. Check out my other videos. Let's get into it. Prop firms have all sorts of issues with them for new traders. The first one is, in general, how they work. You have to understand this. These online funded prop firms, guys, they're operating a business. They have to make money. And from what I've seen, they operate a similar business model to a casino because they're dealing with capital inflows and capital outflows. They have to control the amount of money they pay out to traders relative to the amount of money they're making from their fees, of whatever fees that they generate. They could be the entry fee that people pay for the evaluation. It could be commission fees from people trading. It could be them actually copy trading profitable traders. But I would bet on the fact that the majority of their income is probably from the reset fees. And I'll tell you why I think that. Because the majority of traders on the internet and YouTube right now, I know this for an absolute fact, are in the beginner to intermediate level, more in the beginner areas. And I've done multiple polls on this to be able to prove it. And you can go into any YouTube comment section and you can see just by reading the comments that the majority of people on YouTube researching trading are beginner level, less than 3 years of experience trading. Okay. So what this means is that the majority of customer base for these online funded futures prop firms are beginner level. And what that means is that the majority of those people are likely to reset the evaluation and fail the evaluation before they succeed. There's a large percentage of income that these companies are making from beginner traders that continue to reset these things. Now, I'm not saying this off the top of my head. There's literal stats and data. You can put together the data yourself to see this for yourself, okay? I'm just telling you this because I know this for an absolute fact that the majority of traders on YouTube are beginners. So if the majority of their customers are beginner level, they're learning trading, then they're more likely to fail. It's simply as that. In trading, everybody is going to fail. This is like literally the number one red pill, call it a red pill, that people need to accept in the trading industry and any industry that is involving gambling, because let's be honest, that's what we're doing here. Doesn't matter if you're investing, swing trading, day trading, you're playing a business of gambling to a degree. People that get into it from the start, they don't actually know the game of gambling. They don't know the game of chance very well. They're going to fail. Even people that have been in this for years, failure is inevitable. You should accept it with an open heart, which is what most people don't do at first. They learn this later, that literally The failure part, the failure aspect of trading is actually one of the most necessary things to grow. And I'm going to segue a little bit later in the video into something that I think that is just so important. It's the number one thing that new traders are not thinking about when they first get into trading. Now that you understand a bit about how these firms work, I want to give you guys the first number one reason why I think these things are problematic for new traders. And it's this: they give arbitrary rules to the traders that are not really related to how the market actually works. Now, if you take a minute to examine a market and you see how it operates, you can look at it on a depth of market like that over there on my screen. You can't really see it, but basically it shows the bids, the offers, and each trade going through one by one. And a chart, for example, on any time frame of your choice. I like to use 15-minute and daily charts and weekly charts. Take a minute to analyze the market, and then take another minute to analyze the rules that the prop firms give you. And what I found is that there's pretty much a large disconnect between the two. I found that a lot of the rules that these prop firms give to traders, things like trailing drawdowns, certain rules about you're not allowed to trade past a certain hour of the day, and there's all kinds of other ones. I found that those rules are super arbitrary and they're super counterintuitive to how the market actually works. And the only way you can believe what I'm saying is if you look at the market for yourself and analyze the market and then analyze the rules that they give you. And you might come to the same conclusion, which is that those rules are completely arbitrary and they don't actually give you much context or any help for trading the real markets. In fact, they make it harder for you because you're following these guidelines. They give you these rules that are tailored to the prop firm, and I'll tell you why they have these rules, why I think they have these rules in a second. And basically, you have to follow these rules, and they're making your trading a lot harder and more complex because if you forget one of the rules, all of a sudden, boom, you blew the account and you have to reset it. And comment below if you've experienced that below, because that seems to be one of the most common things that people experience with these online funded prop firms. Normally they're having trouble with one of the rules or they forget one of the rules, and that's the reason why they blew up the account. And I'll tell you one thing is that those rules are there by design. The prop firm has to make money. They have a business model. Like I said, they're controlling the capital inflows and outflows of their business. Sorry if I'm talking too fast. You can slow down the video. That's the whole thing, guys. That's the whole thing. Those rules are there by design. They're there to make sure that people will still be failing these things enough that they can continue to generate more income with the resets. And the rules that they're giving traders are mostly arbitrary, because if you objectively analyze the market, you can come up with different trading strategies that would definitely not fit in the context of an online funded prop firm, but in the context of trading real money, they would fit because you don't have those same kind of boundaries that you would have. This is one of the reasons why I think that these online funded prop firms are not a good way to learn about trading, because you're learning with these weird restrictions that they're giving you that are not necessarily conducive to how the real market trading works. And the more information you gather about trading, listening to different trading interviews of people who have traded large options trades, people who have traded seven-figure portfolios, people who have blown up multiple times in their lives, they'll all tell you different stories. And using that information, you might come to similar conclusions, which is that these arbitrary rules that the prop firms give you have literally nothing to do with live trading. Now, there are certain things that might be helpful little skills that you might pull out of trading a prop firm account, like, some basic risk management techniques, which is obviously something that all traders need to know. And if you're a super beginner and you really just have no risk management framework, then the prop firm account might be actually beneficial for you because, you just don't have any risk management to begin with. So you actually need something to start with. So you're better off paying $90, learning how hard trading is to start. And then once you have a general idea of your risk management, you can fail a couple times in the prop firm, then go ahead and trade your real money. But the thing is that you still have to man up at some point and go trade at the small stakes table, mid stakes table, whatever you're comfortable with. But I would say start with the small stakes table because you'll learn a lot. I traded micros, which is technically the small stakes table when it comes to futures trading. I traded micro futures like micro NASDAQ for about 2.5 years, no joke. And then towards the end of that, I switched over to trading treasuries, 5-year treasuries, and then crude oil. And all of it was pretty much small stakes. But what I learned during that period, guys, is not something that I think most new traders would learn trading a prop firm account. And I'll continue to explain why. The next reason why I think that prop firms are extremely problematic for new traders is related to one of the psychological aspects of it. And it's the low ticket entry price. And it's related to how you perceive the money you spend on these prop firm accounts. Let me go on with this. So you pay $90 for one of these things. Now, normally when you trade these accounts, they force you to trade for a number of days. You have to actually place trades for something like 30 days straight, 20 days, whatever it is for each one of the different firms. And There's a number of different psychological things that can occur when you're forced to place trades intraday for 30 days in a row. Remember, when you're trading live money, you're not forced to trade. You could look at the market and you can say, you know what, today we're not trading. Or we might just take a couple little scalp trades. And then all of a sudden, the big trade you've been waiting for on a larger time frame is now playing out. So now it's time to go bigger on that one trade. It's just a hypothetical example, but I'm just giving you like my perspective of how I scout out trades. I'm more of a swing trader, let's be honest. I spend time and I scout out for bigger picture trades most of the time. So most days I'm actually not trading, and every now and then I might scalp around some positions. So the main thing about the low ticket entry price is that since traders are spending a low amount of money to get into these things, they don't give a big mental precedence to the funded account that they have. It could be an evaluation or it could be they're actually funded. Now, over time, as days pass and you continue to trade these accounts, you build up different emotions. It's absolutely normal. I'm going to talk more about emotions as we continue here. And these emotions that you experience, frustration, anger, you start to get impatient, you start to feel a bit uneasy. You're not so sure if you're going to pass it. You're tired of looking at the account balance go slightly down, slightly up, slightly down, slightly up. That grinding thing, it kind of gets to you after a while. And then what happens over time is you become more and more likely to become careless about the initial amount of money that you put up for that account. So you put up $90 for the account. After 20 days, you've reached a point where you're just so freaking fed up with this garbage, watching your account balance go up and down, take a couple good trades, a couple bad trades, and then you see an opportunity that you think is a good one. Because you're so fed up of watching your account go up and down, you decide to increase your risk. And I'm sure most of you have experienced this, is that's the trade that loses and you blow up the account. So you're more likely to engage in reckless behavior after a certain time because your real life risk tolerance of how much you're actually willing to lose is not in line with how much money you actually paid to trade that funded prop firm account. So there's like a disconnect there. So your real risk tolerance, you might have an experience trading already, and let's say you're comfortable losing $500 a day. You only paid $90 to enter that combine. You're on day number 15, day number 20, and you haven't been trading very well because the market conditions just haven't been that great. There hasn't been a lot of opportunities, and most money in trading is probably made 10% of the time. There's a saying that goes by that, and a lot of traders would agree with me there. Most of the money is made 10% of the time, 90% of the time, you're kind of grinding. So since the low ticket entry price is so low, it increases the chance that you engage in reckless behavior and you go all in on a specific trade or something, and you just continue to be reckless, and then you start to experience more wild P&L swings. And the thing is with those prop firms is that they don't like that. They don't like when traders have wild P&L swings. So you end up most probably blowing up and failing, or they might just cut you off completely. I've heard stories where people just get cut off from these things just because they don't like your style of trading, which is fine. They're operating a business at the end of the day. They have to control their capital inflows and outflows. And that's why I'm saying that these prop firms, for me, are not really conducive to really building a real trading strategy and understanding how trading really works over a long period of time. Because talk to any experienced trader and they will tell you some of the things that I'm telling you is that most of the money is made in a short amount of time, and then most of the time you're just grinding away. People get into these prop firms and they're thinking it's going to be so good for my strategy. You may not even have a strategy. And if you don't have a strategy, you don't know what you're doing, you're way behind the curve because you're just fitting into that ballpark of the new traders. I'm still sort of figuring this out. I want to pay $90, do an evaluation, learn a couple of different strategies. You're testing out the strategy, but you're literally setting yourself up for failure because first thing is you're playing against those rules which are there by design, which are literally there so that you're more likely to reset it because, oh, I forgot about that one little rule where a trailing drawdown, and then I took an extra risk on a specific trade, and then all of a sudden, oops, now I'm down on the account. And you either blew it up or you're resetting or whatever's going on. It's just complex. You know what I'm saying? All right, this brings me to my final and most important point regarding online funded prop firms and the biggest difference that there is between trading real money and trading these online funded prop firms. So check it out. You're basically not getting enough risk exposure to be growing as a trader. Or some of you guys are going to think I'm absolutely freaking insane for saying this. And by the way, this is not any advice to go out and take real risks. But the way I see things, the way I perceive things, and from my experience in life thus far, I'm 29 years old, I'm self-employed, and I own my own company, and I'm fully self-sufficient and fully independent. What I can tell you from my experience is that, guys, if you're not jumping out there into the pit of sharks and taking real risk, you're not going to grow. You're not growing. You're not putting yourself through enough pain to learn from it to be able to grow. The body and the mind are pretty unbelievable in what they can adapt to. So the thesis behind this and how it relates to online funded prop firms is that when you're trading these online funded prop firms, you're not putting up enough risk. You're not taking real risk. I mean, you're taking some risk, but you're not taking anywhere close to the amount of risk that you'd be taking if you'd be trading a live account. By the way, if you're looking for a real broker, check out my broker Ironbeam. They have good customer service, and I've been using them for about 1.5 years, I would say, and I haven't had any problems with them thus far. What I like about them is that you can use any trading platform. You want to use TradingView, no problem. You want to use Sierra Chart, they support all the major trading services like CQG, Rhythmic, Teton order routing, which is Sierra Chart over there. That's the one I use. That's the one I'd actually recommend. And there's data online explaining why it's one of the better ones. So if you're looking for a futures broker, check out Ironbeam, reach out to them, see what they recommend. And I only recommend products and services that I actually use myself, guys. So you know that we're talking about some legit stuff over here. Your body and your mind are pretty unbelievable in the kind of pain that they can withstand and adapt to. Meaning that when you put your body under physical and mental stress, it's going to adapt at some point. And my argument is that when you're trading these online funded prop firms, a lot of the time, the risk you're taking there and the risk you're exposed to financially is not enough for you to be growing, truly growing as a trader and as a risk taker. Now, there's a real big difference between trading at the small stakes table, the real small stakes table, micros, for example, versus trading an online funded prop firm, the big boy contracts. Because you're risking real money at the end of the day. You're trading real money. You start with a couple of $1,000 account and you're starting to trade it and get a feel for what it is to take real risk. To really sit there and say, today I lost $100. How does that truly feel? Today I lost $200. Today I lost $500. Today I made $200. Today I doubled the account. How does that make you feel physically and mentally? You're experiencing more emotions. You're experiencing more about what it is to truly be a risk taker, to be a trader. You're experiencing real life, my friends. That's what real life is. The number one realization that I've made lately, okay, it's that necessity is the mother of all invention. And it's not a crazy realization, but the more I've gone through life, the more this has become true to me, which is that when you put yourself in situations where you have to perform, you need to perform, you are just going to be forced to perform and you're going to have to do something. You're going to have to come up with something. You know, when you're in a hole in trading, like you've taken a few bad trades in the accounts in a drawdown, and then all of a sudden you just seem to work your way out of the drawdown in like an unbelievable amount of time. Like it took like 1 trade, 2 trades, 3 trades to work out of a drawdown that it took you 3 days to get into a drawdown and then you just got out of it. That's a real thing, by the way. And I'll tell you why that happens, why I think that happens. It's because of necessity. Because when you're in a drawdown, all of a sudden, now it's like you're engaged your primal state to the point where now you really got to make that money back. So when you really got to make it back, all of a sudden you start hyper focusing on what are your best trades. And you're like looking at the market and you're like, whoa, okay, that's not a good trade. That's not a good trade. So you're like hyper aware of your strategy and everything. And you just become almost primal to the point where you're only focusing on the trades that are going to make you money. The market doesn't operate in sureties, but you understand what I'm saying. When you have a level of experience and knowledge about the markets, you know which trades are more likely to work and not based on your parameters and your strategy and all that and the current conditions. So when you're in a drawdown, you're operating like in a heightened state of awareness to your strategy, which makes you more likely to take better trades to work out of the drawdown. And it's crazy how this works. It's that when you need something, when you need to work out of the drawdown, you're going to be more likely to work out of it, just simply because you need to work out of it more. You can give a number of examples of this in real life. So let's say you've reached a point in your life where you're pretty successful and you're living comfortably. At one point in your life, when you switched over to that way of living, it was like medium to hard mode in your life. But then, because you became more successful and you've upped your income a bit, now your current situation is considered living life on easy mode. So now you're not growing anymore. When you're trading these funded prop firms, you might grow for a certain point, but it's pretty easy to reach a plateau, especially when it comes to risk tolerance, because you're not really taking real risk. You're not taking enough real risk compared to the amount of risk you'd be taking trading small stakes, mid stakes, or high stakes, the big boys table, which is what we all aspire to get to one day. And the amount of emotional highs and lows that you're going to experience trading real money, guys, is not even remotely comparable to what you'll experience trading an online prop firm. It's just two different things. It's completely different. You're not going to be growing, guys. That's my belief, is that you're not really truly growing as a risk taker. You're not truly growing as an individual when you're trading fake money. most of the time. Now, I'll tell you who is growing. These companies that operate these prop firms are growing because most of their business comes from new traders who are just starting out. And they continue to generate more and more business because of that. And then the other thing is that these people who own these companies, guys, they were not born yesterday. They have experience in the markets. The rules that they make are purposely there to profit from the human tendencies that all traders go through. They know exactly why they're putting the rules there, because they want you to fail. They need to make money. It's the end of the game. That's their game that they're playing. They're exploiting an edge. Beginner traders do not see this, but every single entity that is operating this world is exploiting some kind of an edge in their favor. They're trying to find different opportunities, find different inefficiencies, and find ways to exploit them. These funded prop firms have found an edge, and they are leaning into that to exploit it in any way they possibly can. Of course, it's legal what they're doing. Okay, apparently it is. So that's what it is, guys. In order to grow as a trader, you need to take real risk. In order to grow as an individual, you need to take real risk. There's a certain swagger that you get about you when you are more seasoned as a risk taker. Okay, you could literally have $0 in your bank. You could have just blown a 7-figure portfolio, but there's something about you, my friend, that you have a swagger that no funded online prop firm trader will ever get to, because they don't have the same risk tolerance. They don't have the same life experience. They have no idea what it is to swing that kind of money, to make that kind of money, to lose that kind of money. Once you've made that kind of money as a risk taker, as a pro poker player, as a pro trader, the first thing is you're never considered a nerd by anybody, because nobody views high stakes poker players, gamblers, and traders as nerds once they've made that kind of money doing that. And the second thing is that even if you lost it, even if you blew up a 7-figure portfolio, you still have that swagger, bro. And that swagger never goes away. You can make it back. You know how you made it in the first place, and you have the skills, the knowledge, the tolerance, the experience, and everything that you've built up to that point to be able to put yourself in more situations where you can make that money back. It doesn't matter. What new traders don't see is that when they see a person losing a 7-figure portfolio, they get so freaking turned off by that. They get scared by that. But the reality is that it doesn't freaking matter if they lost it. The point is that they made it, and they experienced everything that they had to go through to get to that point, which means that they have way more life experience. They have way more swagger about them. They're just living life on a completely different level. They don't give a shit, because once you put yourself through that kind of emotional and physical stress, like that kind of stuff stays on you guys. You get battle scars. You get real life experience from that. You just become a freaking boss. And then the other thing is that, dude, when you're operating with high stakes in life, you forget about all the little stupid, insecure crap that people focus on these days on the internet. You're operating at a real level of risk taking. You're putting yourself in situations where you are forced to perform. All of a sudden, what happens is you start to forget about all the freaking crap about how insecure you are or whatever, about how you look, about what people think of you, about, what are they doing over there? You literally forget about all that crap when you're forced into situations where you have to perform. Guys, there's so many benefits to trading real money. It's like not even comparable. You can't even compare it, guys, to trading a funded fake account. Now, of course, I'm not saying that there's no benefits to trading those things, because there absolutely freaking are. But I'm not going to cover them now. But there are some benefits to them. And anyways, check out my friends over at Iron Beam using the link down below. And I will see you guys in the next video. Hope you enjoyed it. Let me know if you want to hear more. Cheers.